Okay, so you have to start for the month of August. You have to do the same thing for the August month as well. So let me make it a little bit smaller. Right, for the month of August, if you look at it, sales would be 11,000 units into 60 pounds. We know that already. Then cost of sale. Do you have any opening stock for this? Yes, we have. What is our opening stock? July's closing stock will be the opening stock of August. So the opening stock will be here 36,000. This one. So this is 1,200 units. We already know that. Then after that, do you have any production? Yes, we have. So when it comes to production, you have to calculate what is the amount that you are going to use to value your stock. So when it comes to marginal costing, we know what is the value that we have to use. That is the same value. Okay. So that will be 10,200 into this 30. This 30 that we calculate. Then after that, you have to less your closing inventory. How to calculate the closing inventory? Right, let me tell you how to calculate it. So what is your opening inventory? That is 1,200 units. Plus what is your production? Whereas in July there was no opening inventory, so we used 0. But here there is an opening inventory which is 1,200 units, plus the production will be 10,200 and minus the sales will be 11,000. So you get 400 units of the closing stock. This into what is the value? 30. So you just make this amount here. Right? Okay. So you can make the same underline here. Sorry, there is a small formula. There is a small formula error here, so you have to put bracket here and you have to put bracket here. Okay, so 12,000. So if you just get the sum of this, that will be opening inventory plus production minus closing inventory. So you get 330,000. After that, you do the main calculation, that is sales minus cost of sale. Cost of sale is 330. So that you get 330,000 as a difference. After that, what you have to do, you have to add your variable non-production cost, which is 15% of the sales value that is given in the question. So 15% of this would be 99,000. Then contribution is this amount minus this one. Then you get 231,000 as contribution, and fixed production overhead will never change. So that is 99,000, and 40,000 will be the non-production cost. It is a 6. Then let's calculate the net profit. That will be 231 minus 99,000 minus 40,000. That will be 92,000 pounds will be the net profit. Alright, after calculating this, let's go and calculate absorption costing profit. Right, you have to use the same method to calculate this absorption costing profit. Right, so the sales figure during the July month would be the same, right? Sales in July 12,800 into 60, and less cost of sale. So opening inventory will be 0. Production, so you need that value to value your inventory. So for that, what you have to do, you have to take the direct material, direct labor, direct expense, variable production overhead plus fixed production overhead, where you don't take fixed production overhead in the previous calculation under marginal costing. So the direct material would be 20, direct labor is 60, direct expense is nothing, and variable production overhead is 4 plus fixed production overhead. You need to calculate. How to calculate fixed production overhead? Fixed production overhead is the OAR. So in order to calculate the OAR, you have to get the budgeted overhead cost, so fixed production overhead cost, and you have to divide this by budgeted output or budgeted activity level. Right? If you do that, budgeted fixed production overhead is given here as 99,000. Right? And you divide it by budgeted output. How do you get the budgeted output? So budgeted fixed production overhead is given as 99,000. Budgeted output is here. Normal capacity is 11,000 units per month. This is the budgeted output level. So it is 11,000. If you get the OAR, you get 99,000 divided by 11,000. You get 9 as the OAR. So here with this 30, you have to add the fixed production overhead as 9. So the cost will be 39 pounds. So what you have to do here, you have to get the production. So during the month of July, the production was 14,000 into 39. That is the inventory valuation figure. Right? So 546 and minus, okay, then calculate the closing inventory, which will be 0 opening plus production is 14,000 minus sales is 12,800. So you get 1,200 as a closing inventory into 39. Right? Then after that, what you get? You get your difference. Opening inventory plus production minus closing inventory. Right. After this, there is one more important thing that to calculate your under or over absorption. How can you calculate under or over absorption? In order to calculate the under or over absorption, you have to under or over absorption. You have to use a formula, or you have to use some equation or some workings. You have to do some workings to calculate that. Okay, so first of all, the workings would be overhead absorbed. How much overhead you have absorbed? Then you have to get the actual output level or activity level. Then you have to calculate whether it is under or over absorption. If your answer is coming in the negative form, you are getting a negative answer, that is called under absorption. If you are getting a positive answer, you are getting over absorption. Right? Let us calculate here. So overhead absorbed. In order to calculate the overhead absorbed, what you have to do is you have to get the OAR into actual output. Right? Actual output you have to get. So let us calculate here. OAR is 9. We already calculated. So this is the OAR. 9. 9 into actual output is how much? For the month of July, actual output mean actual production, that is 14,000. Then actual output, which is 14,000 again. Sorry, this is not actual output, this is actual overhead incurred. Sorry for that. Actual overhead incurred. Actual overhead incurred is here. Fixed production overhead incurred is 99,000. So I can be more clear. Fixed. I can add the word fixed. Then if you do the calculation, let's take the sum of this. You get 27,000. So it is a positive figure. Why? Because actual overhead incurred is 99,000, but you have captured already 127,000, which is over absorption. That means you have captured more than the actual, right? So it is called over absorption. So since it's coming in positive, we can say over absorption, right? So 27,000 over. So over mean you have to add, under mean you have to less. That's why it's in the bracket under, and over is a positive figure, so it's not in the bracket. So that if it is over by 20, you have over absorbed by 27,000. Before that, you need to calculate this one, sales minus cost of sale, 268,800. So what will be the gross profit? For the gross profit, you have to adjust your normal differences with this under or over absorption, so that you get your actual correct gross profit, which is 295,800. Then after that, you have to less your variable cost. Get here net profit. Variable non-production cost. So with regards to variable non-production cost, where can you find that? Variable non-production cost is here. Variable selling expense. That is the 15% of the sales value. So here you get the 15% of the sales value. Then after that, you have to less the fixed non-production overhead. So where is the fixed non-production overhead? That is fixed selling expense 14,000 plus fixed administration expense 26,000. So 14,000 plus 26,000. So this is your final answer. Your net profit would be, you have to start from the gross profit and you minus your non-production cost. Then you will get 140,000. You do the same thing here for the month of August, which is the sales for the month of August is 11,000 units into 60 is the selling price. Then less cost of sale. So do you have any opening inventory? Yes, as usual that we did in our previous question. So previous way of calculating in the marginal costing. Yes, you have closing stock of 46,800 at the end of July. So that will come as an opening balance of August. So we get 46,800, and you have this production for the month of August, which will be 10,200 units into the value of inventory per unit, that is 39. We already calculated here, 39, right? So then after that, closing stock, which will be the opening stock was 1,200 units, right? Then you have to add your production. production is 10,200 minus sales is 11,000. This one into 39. Simple. Quite simple as that. So let's sum here. This one plus this one minus the gross. So you get 420,000. We are doing the same thing, right? Then after that, what is the difference that you are getting as a gross profit before the adjustment? That is 660 minus 429. This will be 231,000. Now you have to again calculate the under or over absorption for the month of August. For the month, this is for the month of July. For the month of August, you have to calculate again. Overhead absorbed was OAR is 9, same OAR that you are going to use it here, into actual output. Actual output is 10,200 units. That is the production during the month of August. Then after that, what you have to do? Actual fixed overhead incurred, that is same 99,000. So if you just get the sum of it, so you get 7,200.